Hi everyone. I wanted to go over the insurance expense. Insurance expense, I think, is a little bit easier than the sales revenue. Let's look at the different components. We're being asked for insurance expense as of August 31st, 2014. So, a couple of things that help us here. One thing that helps us is the amount that's in the beginning prepaid insurance account. And then we notice that we have left over 390. So again, we're going to use the same tactic. We're going to create the beginning balance and the ending balance and then analyze the differences in between. Let's take a look at that over in Excel. 440, 390. So we have 440 as a beginning amount. Let's go ahead and put that in yellow. And we have 390 as an ending amount. Now, if we have a debit, if we prepaid insurance of $440, there's got to be an offsetting credit in cash for that. Obviously, they don't give us insurance for nothing. We had to pay cash of $440, or somehow we had to have compensated them for the 440 we started with. And this is in the past, somewhere in the past, we prepaid 440, and that's what we started with. Now, if you look carefully over here, it will say that uh, payment of prepaid insurance was 430 million. This is all in millions. So 430 million additionally was paid. So we paid in addition during the period. This is what we're going to back into. We'll put this in UNT green. We don't know this yet. This is what we're trying to solve for. We know we started with this. We're given this. We're given this. I'm just showing you this to show you the offset to this. You got a debit to 440. You pay cash for 440. We also know that we paid another 330 million. We'll look over here. 430 million. Sorry, I said 330. 430 million. So we come over here. We have 430 million. So we know that goes together. We'll put this in a lighter green. Okay. And what you're doing is you're composing the portions or the components of prepaid insurance. Beginning, ending, we know we paid this because it says you paid payment of prepaid insurance of 430. Then it's just a matter of backing into this. I'll go ahead and put it in a different color. Let's put it in red. We're backing into this. If you take 440 and you end up with 390 and you know you added another 430 million to the prepaid insurance account, there's the offset to that, then you know that this difference has to be the credit. The credit to prepaid insurance that has to exist in order for you to go from 440 to 390 is 480 million. And this is recognized insurance expense. So we come over here. We can close this. We're going to put that amount in there, 480. And we're good to go. Again, more than anything else, I'm trying to teach you the approach of how you approach this. Remember, notice how we took the, oops, let me put it back up. Notice how we took the beginning balance, the ending balance. We know this is activity in the middle, so you just have to interpret. And a prepaid insurance account, remember, is an asset, and assets have a normal debit balance, a normal left-leaning balance, just like receivables did. So 440, 390, then you interpret what happened in the middle. Well, when you pay prepaid insurance, if I can get the right account, when you beginning and ending, you pay prepaid insurance, it goes up. Prepaid insurance goes up, and your difference is the 480, which balances this 440 minus 480 plus 430 equals 390, and that is insurance expense. I hope you found this useful.